Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at the indexes. We're going to take a look at some bear ETFs, and then we're also going to take a look at some stocks that were in play today. So as everybody knows, the markets were under big pressure today, and so for first up, we're going to take a look at the Dow Jones Industrial Average. As you can see here, fat RSI dropped below 50, so now it's out of the bull zone. There's a big drop below 20 on Fasto. Closed at 310. That is extreme oversold levels. And then now we have a bear cross here on ADX. Notice the green line crossed the red line to the downside. That's signaling bears are taking control. The big break today was below this horizontal support line and the middle Bollinger Band. If you notice here, during this strong uptrend, the middle Bollinger Band had been holding the whole time. It was tested here and held. Now this close below is signaling downside risk, and it's putting the 50-day simple moving average down here at 2404 on deck. So that is the next key support level. As you can see here, it closed below the lower Bollinger Band, which is the solid purple line. So this is a key support level to hold. EMA4 is the next resistance level. It's up here just below the green line. So a bounce. Bulls are going to want to see a break above EMA4, and it needs to get back above the middle Bollinger Band to get this uptrend going again. If the middle Bollinger Band turns into resistance, that's going to signal downside risk and a potential start of a new downtrend for the Dow Jones Industrial Average. This was the big bearish move that the bulls did not want to see. This is signaling the possible start of a correction for the markets. If the middle Bollinger Band turns into resistance, that's going to signal downside risk. If the lower Bollinger Band doesn't hold here, look for a bounce off the 50-day simple moving average. Notice how bearish MACD is on both time frames. Okay, let's look at the S&P 500 here. Here's ticker symbol SPY. This is a spider, S&P 500. Notice once again there's a break below 50 on RSI. That's a signal the chart is cooling down. Bulls want to see RSI above 50. This is a red flag. Also notice Fasto drop below 20, closed at 3. This is extreme oversold levels, so it is temporarily oversold. So you could see a bounce for a technical bounce due to these oversold levels. But this chart is looking very bearish as well. If you look here, the red line crossed the green line of the upside, minus DI crossed plus DI. That's signaling the bears are taking control. There was a parabolic SAR bearish flip. Notice the dots are now above the candles. This also closed below the middle Bollinger Band and below the horizontal support line in the sideways channel. So this is signaling downside risk. The close below the lower Bollinger Band is frothy to the downside. You could see a technical bounce there. This is 4 red candles in a row. If that happens, EMA4 at 235.67 is the resistance level to break. Bearish stocks ride EMA4 resistance lower. So if EMA4 turns into resistance and candles start forming below the middle Bollinger Band, that is going to signal a new start of a new downtrend for the S&P 500, and that's going to put the 50-day simple moving average down here at 231.51 on deck. That is the next key support level to hold, and it will be the reload level on a pullback. So it should get a technical bounce off that level if it is tested. Notice there was big volume today, and it closed near low of day. This is very bearish. Okay, let's look at the NASDAQ, ticker symbol COMPQ. Also closed below 50 on RSI. Fasto closed down here at 2.26, extreme oversold levels. If you look back here, on this previous big drop back here in December on this drop, you know, when Fasto got below 20, there was a technical bounce. So is there going to be a technical bounce here, or is this going to be the start of a new downtrend? Notice here, you know, it quickly got back above the middle Bollinger Band and the uptrend continued. Well, this closed below the middle Bollinger Band for the first time since this closed back here. So is history going to repeat, and we're going to see a quick recovery and the candles back above the middle Bollinger Band and the uptrend continuing? Or are we going to see a bearish change in trend and the middle Bollinger Band turning into resistance and a new downtrend starting? If that happens, then you're going to be looking at the 50-day simple moving average at 5736 as the next support level, and that is the reload level. Once again, it's going to need to get back above EMA4. If EMA4 turns into resistance, that's going to signal downside risk. There was a bearish crossover on the 8, 13, and 5. You know, the chart's just looking bearish all the way around. Parabolic SAR bearish flip, bear cross on ADX. So all three of the big indexes are under pressure. Well, ticker symbol IWM, which is the Russell 2000. This is the small caps under huge pressure today. Giant drop. It was the biggest drop of all the indexes here. We're looking at a 2.73% drop. RSI closed below 50. You've got Fasto way down here at 1.10. This is extreme oversold levels. Okay, this is a major sell-off. The break today was below the middle Bollinger Band, which is the dotted purple line, and below the 50-day simple moving average, which is the green line. This is signaling big downside risk. It closed right at the 100-day simple moving average, which is at 133, and right at this January support level. This level held 133 back in January during the side. There's been this long sideways channel that has formed. If there's a break below 133, you could see a big drop down here to the 200-day simple moving average at 126, and this gap from back here, this is November, there's this gap in November, that might possibly fill between 127 and 128 if there's a close below the 100-day simple moving average. Right now, that is the key level to hold at 133.40. If there's a close below, that's going to signal downside risk and a potential gap fill. You've got a parabolic SAR, bearish flip, bear cross on the ADX, and you've got a bear cross on MACD. Also, notice the giant volume spike down here. Big volume spike on a down day, that's a major red flag signaling more downside risk. Okay, when the small caps are under pressure and they're dropping, what do? You trade TZA. This is the small cap bear 3 times. So this had a very bullish day today. Notice it was up 8% today when IWM was down 2.7%. So when IWM is down, you can capture nice gains through trading TZA. This is the 3 times bear ETF here, and notice that RSI closed in the 50 to 70 bull zone. So this is a very bullish close on RSI. It was frothy on Fasto at 97.93. That is signaling temporarily overbought. If it can stay above 80 and stay above 50, that could signal a possible start of this new uptrend here. There was a bull cross on ADX. Notice that plus DI is at its highest level in quite some time, in months. You have to go way back here in November to see this level on 80 on plus DI. So it is trying to break out here. This, once again, TZA had this sideways channel going. It broke this channel to a lower level down here and tested 17. It was started the day trading below the middle Bollinger Band. Today's close above the middle Bollinger Band, the dotted purple line, and above the 50-day simple moving average, the green line. That is signaling more upside potential. It closed above key resistance levels. If the 50-day simple moving average turns into support and it can break this January high close, then we're looking at a potential run up to the 100-day simple moving average. That is the next target at 20.88. What we want to do is we want to see the 50-day simple moving average and the middle Bollinger Band turn into support and a new uptrend begin. Needs to break out of this channel by closing above the closing price on January 19th. If you can get a close above that, that signals that the previous channel is breaking and there's a potential run higher. If it really gets going and it breaks out above the 100, now you're looking at this November gap as a possible fill. This is a gap back here, an unfilled gap. So that would be a potential target on the upside. We can talk about that later if resistance breaks. Notice how this chart is heating up. There's a parabolic SAR bullish flip. The dots are below the candles. Huge volume spike today. All right, the biggest volume in many months. Notice the bounce on MACD line off the signal line, and there was a bullish crossover on the 8, 13, and 5. These are all signaling more upside potential. Okay, let's take a look at one of the top performers. Was this LABD, the biotech bear 3 times. Okay, this was closed up nearly 15%. RSI is now in the 50 to 70 bull zone. Notice it's taken a couple months for it to get back up to this level. So this is a signal the chart is heating back up. You got a frothy Fasto at 98, but it's above 80 and above 50. So this is signaling that the chart is building strength and heating up. The bulls are taking control. This is being confirmed on ADX with plus DI crossing minus DI to the upside. You got a parabolic SAR bullish flip. There's a break above this falling wedge, this declining pattern, this downward channel. Notice the ascending resistance line has been broken today to the upside. Also, there was a close above all the EMAs. Notice how the pink line crossed the lime line to the upside. That's what we call an EMA 4, EMA 8 bullish crossover. That is an early reversal signal. The big thing today is this close above the middle Bollinger Band, this dotted purple line. That was a huge close. If it can turn into support, then we're talking about a new uptrend beginning. This is a major red flag for the biotech sector. This is signaling big downside risk and a possible uptrend for the bear bear ETF. Our next target is the 50-day simple moving average and upper Bollinger Band at this 12 to 1231 range, and this high close on February 23rd. So if we can get a break above all those levels, then you're talking about a potential run up here to the 100-day simple moving average at 15. This is a good start here. If you go back here in January, there was a close above the middle Bollinger Band, but it failed to turn into support, and the downtrend continued. What I'm seeing is the difference this time for these bear ETFs is and coming up here, I'm going to show you VIX, is that now the indexes are in a downtrend. Now they are below the middle Bollinger Band. When there was this close back here in January for LABD above the middle Bollinger Band, the NASDAQ and the biotechs were still in an uptrend. So that made it hard to get an uptrend going for a bear ETF. But now that the indexes are now in a downtrend and they're forming candles below the middle Bollinger Band on the daily chart, this signals that this could actually create new uptrends for these bear ETFs. If that happens, then today would be day one. You know, this would be day one of the start of a new uptrend. So that's always your best entry point, is on the first day of a reversal of a trend. Notice this is a long downtrend. This is the first day that it's breaking. If a new uptrend starts, this was your good entry point. Okay, so yeah, giant volume spike, parabolic SAR, bullish flip. MACD is looking bullish here. If the 8, 13, and 5 turns positive, that would be another green flag. Okay, let's look at JNUG. The gold is heating up with while the markets are cooling down. It looks like we got a flight to safety play going on here, and we've got keep an eye on RSI. A break above 50 would be bullish. Right now, Fasto is in the bull zone between 50 and 80. What's going on here is the break above the middle Bollinger Band. Notice this dotted purple line. There was actually a close above that level today. Now the bears were strong into the close, and they formed this doji. They pulled back and it closed near the open, but it did close just above the middle Bollinger Band. So right now, the middle Bollinger Band at 730 is the key level to hold. If that level holds, then a new uptrend could begin. Our next target's going to be, you have to break above this high close here, just above 750, but then we're looking at the 100-day simple moving average and the 50-day simple moving average. If it can get above this 50-day simple moving average at 879, then it could actually break out. We could be talking about a run up to the upper Bollinger Band and possibly back up to the 300-day simple moving average and these previous resistance levels. So JNUG is heating up. Now, in order for it to continue, we're on this back here, made video and stuff and posted charts on the break above EMA 4. That was a signal it's heating up. It's fully, performed excellent. It turned EMA 8 into support, EMA 13 into support, pulled back, confirmed. Now it's above the middle Bollinger Band. It's stair climbing higher. It's backfilling and working its way higher. So the next step is to hold on to the middle Bollinger Band. If it can hold on to the middle Bollinger Band, then it should continue pushing higher. So far this has been a really good play. Notice the bullish crossover on MACD on both time frames. There was a bullish crossover on parabolic SAR. There was this big load candle right before this breakout. So yeah, so JNUG has been hot. It just needs to turn the middle Bollinger Band into support to continue the uptrend. Let's take a look at VIX. Okay, let's see how volatility is doing. We've got a bullish development here today. Notice there was a downtrend, candles forming below the middle Bollinger Band. The deal today is there was a close above EMA 4. Okay, it closed just below this level here on the 14th. This is the first close above EMA 4 since back here in what is this, the end of February, on February 28th. And so it closed right here at the just above EMA 8 at 1639. That's the next level to turn into support. We're looking at EMA 13 here is the next level to break. If it can break that, then the middle Bollinger Band at 1721 will be the target. So that's the initial target, is the middle Bollinger Band at 1721. There was a close back here on the last trading day in February above that level, and it failed to turn the middle Bollinger Band into support, and it pulled back for a month straight. Now going forward, if it can actually close above the middle Bollinger Band and then get another close above that level, we could be talking about a run up to the 50-day simple moving average. This is in a very strong downtrend, and right now this is just a bounce play. In order to head higher, it has to stay above EMA 4. If there's a close below EMA 4, the VIX trade will be off the table and it will no longer be in play, because it could continue dropping for another month. So for this to be a good play, it has to stay above EMA 4. Notice we've got pinched on both MACD time frames. It's starting the bullish crossover in the 8, 13, and 5. This is all bullish developments. RSI and Fasto just had the crossover over oversold levels, so that's a signal the chart is heating up. Okay, so let's look at TVIX, okay, TVIX. This is the 2 times VIX, and it's heating up as well. RSI and Fasto above oversold levels. You got the exact same setup here with the close above EMA 4, and then just below EMA 8. That's going to be the key level to break at 38.17. If it can break above that, then we're looking for a potential run up to the middle Bollinger Band. We want to see the middle Bollinger Band turn into support for the VIX traders. You know, it didn't happen back here, but like I said earlier, when VIX closed above the middle Bollinger Band on the 28th, the markets were still in a very strong uptrend. You know, so they were still above the middle Bollinger Band on the daily charts. Now that we have the S&P 500, the NASDAQ, the Dow Jones Industrial Average, and the Russell 2000 all closed below the middle Bollinger Band, there's a good chance that this could actually run up to the middle Bollinger Band and get a new uptrend going. And, you know, this is just day one of the bounce. We got to have follow through now. So, yeah, started with the bullish crossover down here on MACD. Okay, now let's take a look at the TVIX 15-minute chart. All the other charts have been daily charts. This chart is a 15-minute chart. I just want to show you what we're looking for tomorrow. Each candle on this chart represents 15 minutes of trading. What we want to see is a break above this level right here, the 145 candle at 38.56 basically. If it can break above that, then that'll signal more upside potential. It needs to hold on to the 200 simple moving average at 37.88. If it can do that, then our next target is the 300 simple moving average at 39.18. That'll be the next big level to break on this chart. Stocks many times on the 15-minute chart run into the 300 simple moving average and top out. So in order for this to break out higher, it's going to need to turn the 200 and the 300 simple moving averages into support. There is a bullish development here with the 50 simple moving average bullish crossing the 100 simple moving average. So this is signaling the chart is building strength. It needs to hold the middle Bollinger Band. If it pulls back below the 200 simple moving average and closes and forms candles below the middle Bollinger Band, it will no longer be in play. You know, we don't want to be holding if the middle Bollinger Band turns into resistance. If you hold and the middle Bollinger Band breaks, you know, this will be your last signal of hope right here is this 36.60. You'd want to see this hold because if that breaks, you're looking at a drop down to the 50 simple moving average. You know, bullish stocks that are heading higher, they form candles above the middle Bollinger Band and above the 50 simple moving average on the 15-minute chart. So if candles can keep forming above both levels, then the TVIX will be strong. Okay, let's look at the big winner today, PULM. This stock, you know, we've been tracking this for a long time, and finally heated up last week, and then today was the follow through. Nice close with RSI at 56. That signals more upside potential in the bull zone. Fasto closed at 78, but not at overbought levels yet, so it still has got some juice to run. You've got a bullish crossover with plus DI crossing ADX to the upside. Okay, the bullish development today was the close above the 50-day simple moving average, the green line, and above the middle Bollinger Band, the dotted purple line. That's what we were really looking for. We wanted to see a close above the middle Bollinger Band, and now we want to see that level turn into support. Back here in February, the middle Bollinger Band failed to turn into support, and the downtrend continued. If that happens again, if you see a pullback and a close back below the middle Bollinger Band, then PULM will no longer be in play. For us, the middle Bollinger Band is the stop loss level. You know, do not hold with the break below that level. If it does hold, then we're looking at the next target is the upper Bollinger Band, and this close on the 27th is the next targets to break. If they break, then it's the high close back here in February, which is just above. And if you can get above the high close in February, then you're actually talking about a potential run back up to 7. So the chart is heating up. There was a bullish crossover in the 8, 13, and 5. Well, it looks good as the volume. You know, the thing is this stock has good volume on the up days, but notice how the volume can disappear. So just get careful, you know, just be careful you don't get caught holding the bag. Okay, let's look at EGLE. Okay, this stock is heating up. There was a after hours news here. Let's see if I can get this for you. Yeah, right here. There was a Form 4 out today. We've got some insider buying. You know, the CEO has acquired some options. So we're thinking this chart could heat up here. Check it out here. It's been hitting the 50-day simple moving average. I've been posting charts showing that it's at that resistance level along with the 100-day simple moving average. They're both at, you know, basically at this 589, and the bottom of this channel is the middle Bollinger Band. So if you could see here, there's this the bottom of the channel, the top of the channel, and so it's been forming these candles in this really tight channel for the last couple of weeks. And if there's a break below the middle Bollinger Band, then it's no longer in play, and you'll be looking at a potential reload down here off the lower Bollinger Band. because that'll be the next support level. And then if it can break above the 150-day simple moving averages, then we're looking at a potential gap fill. See this gap right here? So we're looking at potential gap fill and then a potential run up to the 200-day simple moving average. That would be the target, and that's what we're looking for. You know, you've got a vote of confidence with the CEO loading up on some options. So you know, maybe that's going to be a trigger to get this thing moving. If a break above the 50 and the 100 and above the bottom of the gap level, that's this green line, should signal a gap fill. If it fills the gap, it might run up to the 200-day simple moving average. So keep an eye on EGLE. And then the last ticker here, this is over-the-counter stock. Keep an eye on RSII. It had some news out about a merger. You know, it did the typical OTC thing where it failed to follow through and it pulled back. And notice how the volume dried up. It got all the weak hands have been shook out. All we've been waiting for is a close above EMAs 4 and 8. That happened today, and so this should be the signal that it's ready to get moving again. RSI is above 50 at 52. You know, you got Fasto way down here at 9.7. So there's a lot of juice to run, and for this play, it's all about EMA 8. If it can stay above EMA 8 right now, we want to see EMA 4 cross above. If it can turn those levels into support, then it should head higher. If there's a break below EMAs 4 and 8, it will no longer be in play. Okay, thank you for viewing this video. If you'd like to learn more, check us out at our YouTube channel at mychartcoach.com. Check us out at our website at mychartcoach.com, and please join our chat. We you know, teach a lot in our chat, and we post a lot of great information. It's a good environment to learn. All are welcome. You know, beginners are very welcome. We'll show you how this is done and get you started. Yeah, and if you like this video, please subscribe to the YouTube channel. All right, thank you so much.